Breaking economic news, the U.S. trade deficit with the rest of the world. It widened sharply and is leading us to reconsider our optimistic 2.7% real GDP growth estimate for this quarter just passed. Trade deficit is widening. There was preliminary data on this a week ago. Now the final number is in. The trade deficit is $48.3 billion in August versus $41.8 billion in July. $6.5 billion wider, in part thanks to $2 billion worth of new iPhones being imported in. Those of you who bought new iPhones, you know who you are. You are unwittingly driving down the estimates for real GDP in the third quarter, hurting U.S. growth. GDP way up at 3.9% in the second quarter, but whisper numbers on the first look at the third quarter GDP due out Thursday, October 29, are 1% something. Our advice is don't go too far with the weak economy story, because consumers are spending over 3% this quarter, including sky-high 18 million car sales in September. The domestic economy is strong enough for the Fed to remove its emergency zero rates monetary policy that is geared to fighting a deep recession. The recent recession that ended in June 2009. America is doing its part to promote world trade, with imports rising $2.8 billion this month, although still 2.2% lower than this time a year ago. But foreign markets are not as receptive to U.S. goods, as our exports are falling sharply in a way not seen since right before we started entering the 2001 recession. Exports did fall during the first ever world recession, set off by the Lehman collapse in 2008, but that rapid pullback in trade around the world doesn't count, as it was the result of a temporary financial shock. Good to remember, the stock market sell-offs have all been temporary. Remember this especially if you were out in California still waiting for the big one. Exports of goods then are down a huge 3.2% in August, a staggering one-month adjustment, and down nearly 10% from this time a year ago. Blame the dollar's appreciation with the bursting of the commodity price bubble last fall, where the exchange rate move may be pricing our goods out of world markets. You can also blame the weaker economic conditions in many countries around the world, the Euro area, China, Brazil. Maybe it's time to go back and read up on the Great Depression during the 1920s. Net, not a good reading on the economy this morning, with the big jump in the trade deficit in August. This will put the kibosh on any thought of a 3% real GDP growth repeat in the third quarter, and 2% is going to be hard to reach, depending on what inventories do. Are we worried? Well, the domestic economy is in a very, very strong position. Everyone has a job, and consumers bought 18.1 million cars in September. When you bet on a better tomorrow, you are betting that the U.S. can remain an island of prosperity in a world that is still experiencing the downside of the commodity boom-bust cycle. These are volatile commodity markets, and prices do bottom eventually. Stay tuned. Story developing.